plan. Let's look at your credit. There could be something on there from a student loan or an old collection or something you forgot about, that let's get that cleaned up.
Yeah.
Let's look at your savings pattern. Because when you buy a home, you want to have at least 2 months payment in the bank for a first-time buyer.
Real conversations with Amy Dahl about wealth, about generosity, and about family success. Welcome to the Dollars and Cents, the podcast.
Hello, this is Amy Dahl, and welcome to our first podcast of Dollars and Cents. And I am uber excited today to welcome one of my favorite local loan officers, actually my favorite local loan officer, who I've worked with for a number of years. Today we are here with 𝐬𝐮𝐬𝐽𝐽𝐽 from Atlantic Bay Mortgage. And I'll let Lisa tell you a little bit more about herself as we get into this. But Lisa, how long have we worked together?
I've been at Atlantic Bay for 16 years, and I think we worked together here for about 14 years.
Wow, 14 years. That's a long time.
A long time.
So, and we're excited to get to know Lisa, to talk a little bit about the market and where it's going and rates and the most common questions that we get asked by buyers. So Lisa, first, tell me a little bit about yourself. So the viewers don't know you. Tell me about how you got started in the mortgage industry, why you became a loan officer.
Thinking about that, I actually have never done anything else. I started working in real estate during college. I worked for an attorney's office as a closer, kind of segued into that. Yeah. And then started with a mortgage company as a closer. Then I went to another mortgage company, became a processor, an underwriter, a manager. And then in the 90s, my husband and I moved to California, and I did wholesale lending and mortgage broker, and moved back here to Virginia in 2001 and started working for Atlantic Bay about 16 years ago.
Wow, you've seen
I've done all of it.
You've done all of it.
I have a big background. Yeah. I think that I can bring to the process. And I think you see that.
Yeah, a lot. Yeah. I mean, even when I have people that aren't closing with you, or if they're selling and so they don't need a lender necessarily.
Right.
I've come to you, over the years, I've come with you a million questions, and you add such a depth to the lending process. And your husband is in real estate as well and does commercial. He is.
He's in commercial real estate.
Yeah, which adds a whole different aspect to it, which is really cool.
Yeah. Good.
Yeah. And so why did you choose Atlantic Bay?
So Atlantic Bay, I've worked for several local banks. I've worked for other big, large mortgage companies. And when I started with Atlantic Bay, all of the loan officers could fit in one room, in a conference room for a meeting. So now I think we have over 800 employees in 17 states. Yeah. But when I started, it was the culture. The culture is fabulous. We do a lot with community. We give back. Every single loan we close, we give back to the community. We have community partner groups, or community, I think they call them community impact groups. So employees get together and decide where Atlantic Bay Cares is our charitable organization, ABC, right? ABC Cares. They decide within the community where the money's going to go. As an employee, you can make a request. I like this organization. Can you help them out? So it's been really good.
Yeah, we've done some of your events here. We did the Rock Solid,
right,
and we gave back to 𝐶HKD. In fact, we were just over at 𝐶HKD for a meeting at the new mental health center, and Atlantic Bay was a big contributor to that. They're up on the wall there.
Very proud of it. Boys and Girls Club. Very proud to work for Atlantic Bay.
Well, and I think for those that aren't in the local Hampton Roads area, even our local football stadium is named
Old
Atlantic
Dominion.
Bay. Yeah.
Mm-hmm. We have the ODU, I think, quarter halftime.
And isn't the stadium named after Atlantic Bay? Or is
I believe so. Yeah, we have
the whole stadium.
Yeah, so we have tailgates at all the home games.
So very, very active in the local area, which is really, really cool. And you raised your children here in this area for a while?
Yes. My first two boys were born in California, and I just really wanted to get back to Virginia and raise them with their grandparents and their cousins and their aunts and uncles. So I kind of won my husband over. He loved California.
Well, and your sister's one of our loan officers too.
Yes. Yeah, we're the Sister Act.
Yeah, you have multiple sisters in lending.
I do. Yeah. At one point, all four of us worked for Atlantic Bay.
That's crazy.
It was crazy. One is in Florida now, but my sister, 𝐃𝐨𝐬𝐽𝐽 Johnson, is my partner.
Yeah.
And as you know, it's a really unique situation because you can always get one of us.
Yes.
And we cover for each other and we help each other. And I don't know how either of us would be able to do what we do with our families. And, our business without having the support of each other. And the realtors, we don't miss a beat covering, for the realtors.
Yeah, it is so different when I have, when my clients work with you, I know that there's not a moment I can't reach you. And we know in this business, it's hard when everybody depends on being able to reach you right away.
Right.
They find a house, they need that loan pre-approval right away. Nothing is, done so far in advance that.
And if you see the testimonials from clients, whether it's me or anybody else, communication is the top thing that people look for.
Oh, without a doubt.
And, I feel like with Atlantic Bay, even though we are so large, I almost consider the way Galen and I do our business to be a boutique mortgage company.
Yes.
You're going to get us on the phone. You're going to text us if you need us. I mean, we are always available. We have one processor who we've had for probably 10 years, one underwriter who I can call on the weekend if I need her.
Something unheard of.
I mean, yeah. So, I think I love Atlantic Bay. And, obviously been here a while.
Yeah. Well, and I'm impartial because whenever possible, I introduce my buyers to you and I say, I can say without a doubt, you're going to love working with Lisa because you operate the same way I do. It's that communication, educating the client. And
Absolutely.
There are times where I have people with other lenders or closing with other lenders, and I'll come to you and I'm like, Lisa, why don't I how come I've never had to see this? And you always say, well, that's because we take care of that behind the scenes and we don't make you deal with that. And so it is nice.
Yeah. I think because Galen also has the background, that I have, where she was actually a title closer, and we know the whole process. So we can anticipate any problems before. I mean, of course, there are always going to be issues, but we can really anticipate anything that might come down the pike. We think ahead.
It's awesome.
So,
all right. So talk to me about rates. Where are rates at right now? We're sitting kind of high, aren't we?
Well, I mean, you say they're high, but they're really kind of back to where they were. I think in 2008 was the last time we really saw the rates in the sixes.
Yeah.
That was kind of the curve, and those came back a couple years ago. I mean, last year at this time, I looked back, we were close to 8.
Yeah.
So we have to take the good.
Yeah.
Right now. I think we're in high 6s, low 7s for some conventional loans.
Yep. That's actually not
bad
bad
But it's
at all.
not terrible.
Yeah.
I think I want to look at the positive, and I think, with the Fed cuts coming up, one more meeting this year, 3 more. I think 1 more this year is projected, and then 2 to 3 next year. So it may be slow, but we're going to start to see improvement, hopefully.
Yeah, I like that. And I think people have gotten used to where we're at right now.
Mm-hmm.
Those who have been in it for a very short time and only the last couple of years, we got spoiled. I mean, money was basically free, and that's not sustainable.
Those were outliers.
Yeah.
We're not going to see 3.
Yeah, not anymore.
Below.
So you said something that piqued my interest a little bit. I hear all the time the consumer thinks that the Fed rates affect their interest rates.
Right.
And they're not tied together.
They are not.
Can you explain that to the common man?
Right.
Explain what the difference is
Yes.
and why they're not tied together.
So there's not a correlation between the Fed lowering the rate and mortgage rates immediately going lower. You might see a benefit in your credit cards, in your car loans, maybe. We aren't even really seeing that. Right. Your bank savings deposits, you might see all of that. But mortgage rates are really tied. The benchmark for the mortgage rates is the 10-year Treasury. So that's the 10-year Treasury bond yield. That's the number that the government borrows money at. So it's basically, if you follow the 10-year is high, the mortgage rates are going to go high. And for the last week since the election, we have seen that going up. There's just some uncertainty and volatility. But I think last Thursday with the Fed cut, I think some of the comments that were made were more, it's going to be data dependent on what the inflation comes back at. Right now it's cooling.
Yes.
So we hopefully we'll see some improvement. When I say improvement, you might see an 8th.
Yeah.
It's not going to drop to 5% by January. It's just not going to happen.
Yeah.
So we might see an 8th. And then if, the Fed lowers the rates, maybe a half. If we start to see that they're signaling for a big cut, weeks before that, you'll see mortgage rates improve because the 10-year will improve, the 10-year yield. So if you want to be educated about rates, watch the 10-year. But I think you can speak more to, if you want to buy and sell, just buy and sell, because rates are going to always be
Rates are always
changing.
going to fluctuate.
Right.
But historically, homes prices go up.
Right.
Yeah.
Especially in
buying
Hampton
a home
Roads.
is a long-term investment, and you have to think of it that way. and historically they always go up. You're right, especially in Hampton Roads. Before we came down to do this, I was actually talking to a prospective client who called, and she said she bought in an area in Hampton Roads where they're doing a ton of construction, which is out in Ocean View in Norfolk.
Right.
She's thinking about renting her house versus selling it right now because she feels like, they're continuing to build out there. And I told her absolutely. And I said, if you're not familiar with the area, you feel like it's, there's old and new houses mixed together out there. But if you are familiar with the area, you know that, 10, 15 years ago, I was selling houses for $250,000 out there, and they bought their house for $650,000. So it's a long-term investment. Absolutely.
Yeah.
All right. So changing gears a little bit. If you meet with all kinds of buyers. So let's start with a first-time home buyer. What advice would you give them? They're saving up to buy their first home. What should they be thinking about other than, listening to the news media that rates are high or that inventory is low?
I think don't think about rates. I think the first thing I would say to somebody, young and looking at their options is talk with the loan officer. Plan. Let's look at your credit. There could be something on there from a student loan or an old collection or something you forgot about, that let's get that cleaned up.
Yeah.
Let's look at your savings pattern. Because when you buy a home, you want to have at least 2 months payment in the bank for a first-time buyer. because it's based on the county where you're purchasing, the county limit, what you have remaining, and then we have to determine, what they used when you got the loan. And a lot of times people have refinanced. And if you refinance, then that's a different number that they use. So that's why we get the certificate of eligibility. We can get it within 24 hours.
about wealth, about generosity, and about family success. Welcome to the Dollars and Cents the podcast.